The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. This is the Tiger Technicians Hour. My pleasure to be here on this 10th day of July. Let me just quickly get to this. Okay, we've got the Dow right now. The Dow is up 83 points at 26,866. Very interesting session. We're kind of at the lower range of the market right now, even though the market went to all-time highs based on what the Fed said. We're not sure exactly what the Fed is going to do, but we kind of know where they're headed, this quarter point. But this is really what I'm looking at here. Well, for a week now, I said last week that I'm anticipating the second week of July should see some kind of topping action. Doesn't have to be a major top or anything, just some kind of topping action based on a number of things. I'm opening up this chart here on the left, and the reason is, if you look at this Chapman wave inside track repellent zone, this green line and this red line, you'll see that when the Dow went from the 26,695 high in April down to the low of 24,701 June the 3rd, the day we went long, we had gone short, then we went long. What happened was it moved up higher and higher and higher, and then it created a top on the 21st at peak B. In the Chapman wave methodology, we're always looking for Ds. There's a D right there. So the D is what we anticipated. Hit a B at 26,907, and then I could draw in a trend line, and I like to do this like 316, just a tiny little line. It's a little channel in rising in this case, rising at about a 7-degree angle, not a very, very big angle. And then you get another pullback, and it goes to the 9-period moving average, rallies again, and then it because of Boeing, it failed, unlike the others, to break above that high of the 21st. It stalled below it, so that still became a peak B until you go one point, in this case, 26,908 or higher. You don't get your leg C. Well, we finally got leg C at 26,966, pulls back again, just under the 9-period moving average, right onto the black line, and then bounces today. Where does it stop? Right at the trend line. And there's another thing that I wanted to show you. I've been showing it for about 2 weeks now. Look, 26,999 is a very strong resistance level, automated Chapman wave resistance level. You break that, 27,160 is next. That's why I'm saying 27,270, somewhere up in the high 27,200 says no. You've broken out now, and you've included a break of the weekly resistance. The same thing happened to the weekly chart. Look, you've got the Chapman wave inside track repellent zone, got repelled today. It's in leg E. At E, in the second arch formation, is where sometimes you can get a sharp pullback. But the technicals, the MACD is good in the weekly chart, and the stochastics is 89%. That's very strong. So far, this is just real good action. The reason why we've done nothing but taken a little bit off our long positions, especially the long position in the Dow, is because within the context of the Chapman wave formation, as long as the technicals are really strong, you want to remain in that position. The other rule is that when you make new highs in a stock or an index, you tend to keep doing that for a while. So that's very positive. And now the monthly chart also has very strong resistance or repellent zone. And for this month, the repellent zone would be up in the 27,320 level. So that's why I'm saying you need a really strong breakout here to show that this weekly chart isn't making just a little nominal E with a very quick peak D to E and then turn down. You want to see this sustain. I think that's going to be very difficult. And here's why. If you're looking at the S&P has just gone to a leg E. The MACD is good, starting to stall a little bit, still very strong. the stochastic has pulled back. It's still good at 86%, and the on-balance volume never made a new high. So I'm watching this to say there could be a little bit of an arch formation with some testing of the 2950s at some point. So what, that's 300-400 points in the Dow to pull back, maybe 30 points, maybe something like that in the S&P. If there is going to be a turn down, and we don't know that, that's the reason why I want to hold long as you can. Look at the weekly leg E, MACD is good, stochastics 91%, very good. And the reason why I'm thinking we're going to have a couple of months of some kind of sideways pullback is because within the context of this 1, 2, 3, 4, 5, 6, 7-month rally without a peak A, I don't think it's a peak F, I think it's an A, without even a peak, says just on statistics alone, you should have some kind of a consolidation. And that's kind of what I'm thinking we're going to do. We're going to have some kind of sideways, slightly lower highs, slightly lower lows for a little while. Maybe a couple of indexes will go a little differently, but kind of a choppy period. That's what I'm thinking. Here we go to the QQQ, and look at this. This is now in a leg. I have to call it a leg F at this particular moment. I might have to say that was a Chapman wave instant restart. The D to E is actually D to E/A, and this is F/B. I don't want to make it complicated right now. Stochastics at 87%. That's good. MACD is good. The weekly chart is good. Let's just see what happens. That's the reason why I think just some kind of a hesitancy is really what I'm looking for. But look at this breakout in the monthly chart. I have to call this a leg B. There is no H. And the only way you could count this would be to say F/B, but it's not. Oh, I'm sorry, G/B. We've already used up G/A, so you can't get H/B. There's no H in the Chapman wave methodology. This is a B. This is usually bullish for the QQQ series, looking out for the year going into 2000. And well, I don't want to go that far yet, but it is very bullish for 2020. All right, IWM lagging somewhat. Do I have a break? I must have my, oops. Yep, I'm just going to wrap this up right now. I got a minute to the break. I'm running a little blind here because I got the vocals, but I haven't got the orals. For some reason, it worked earlier on, not working now. IWM at 155.71, up 31, just stuck in a bit of a range here. It's in a trading band. Let's just do this gold right now. Gold is up 11.9. Very nice action based on the Fed talk about lower rates. And if you look at silver, silver is up. So 11 at 14.12. Silver is at 15.21, up 0.063. You're really not doing much. I still think this has to do with more. It's like a currency of fear for gold, because things might be happening. But you would see silver, and euro has done very, very nicely. Euro is up, just about to wrap it up. So give me a heads up, please, Mr. Engineer L. And we're at 1.126, up 0.47, up 0.05 in the euro dollar. Good action, but when you look at the weekly chart, that doesn't look good at all. Look at the monthly, it looks just terrible. A lot of work has to be done. I believe I'm just about to wrap it up. Is it coming up? Yep. There we go. Theme music rolling. Thank you. I'll be right back. Basil Chapman, Dow's up 79, S&P's up 13. I'll be right back after these important messages.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $197 a month with the risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. We're back. Basil Chapman. This is the Tiger Technicians Hour. Dow's up 74, S&P's up 12. And what we're looking at here is that the euro has run very nicely to the upside, and we'll see if there's going to be time as well as price in this move up. And if the dollar, and I'll give you the number right now, the dollar, which is up, down 41 cents. Now it's a little bit deeper. See, we in the chart wave methodology, we're always looking for that D. Remember, we're looking for the D from a low bar. You count each successively high peak, A, peak B, peak C, peak D. Well, we just got that peak D in the dollar. This is a pretty serious and immediate response to what the Fed said, but at the same time, the technicals of the dollar are still quite strong. So it's going to take a move to the 96, I would say probably 96.50 or lower, and then you're going to see something happen, because then I think gold has a chance to move in this rectangle formation towards the top of the rectangle formation and go back to the third, let's make it 1426 high that was made about 4 days ago. And if it can hold there, then there's a chance you could start a move to the upside, and the dollar could break 1442.90, start a bigger move. So this is going to be a very important week. How we close Friday, very, very important. Now, going back to our story here, looking at, I just wanted to show you that high-grade copper, very strong move today. That's telling us that it's an immediate response to what's going on internationally. But for this to sustain the move, because copper is down at the lower end of the range, it was back in the 3.40s in 2018, and throughout 2019, it's really been struggling. It keeps coming back to 2.60s. It's at 2.69 right now. If copper is able in the next, let's say a week, today's Wednesday, let's say next Wednesday, a week from today, if copper's trading above 286, that would be a good sign in the sense that it is encompassing international, it's really Dr. Copper, they call it, because if copper's moving well, it means that there's economic activity in many of the countries. And if you're looking at wood, which is WOOD, which is the iShares Timber and Forestry ETF, made a peak E, top at 83.88 in the Chapman wave in the monthly chart back in June of 2018. It plummeted down to the 55 level in December, ran up to the 66s, dropped down to the 54s, and is now struggling at 59. And that's kind of what I'm thinking internationally. There has been some kind of a slowdown. Meantime, back at the ranch, what is important is that the HGX, because of the low rates, the HGX has had a pretty nice rally, but you would expect that the Philadelphia housing sector index with rates at their lows, I mean, multi-year range of the lows, would be close to the all-time highs of January of 2018. 369.15 was the high, plummets to 227 in December. Wow, I mean, 29%, 30% decline, and then rallies for a really good run from 227 to the latest run of 324. I mean, 100 points, that's what is that, about 28 or something percent. Yeah, that's a, that's, yeah, with a very good gain, and now it's stalling at that resistance. I would have thought it would be much higher, but holding here is still pretty good action for the home area. Let's look at Toll Brothers, one of the really great companies in the home builders. Not doing very much, kind of disappointing. Now, this is going to be very interesting. I'm going to show you the E-mini. The E-mini made its requisite D. Well, first of all, it made a peak E in that big spike up from the 8:30 news report of the Fed, and it spiraled up to the 307.50 all-time high, and then it just took a dive. It just went down, 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 dropped to the 200-period moving average. This is the only reason why I have these longer-term moving averages on a 2-minute chart, is because it goes back 200 bars. And that 200 bars said, whoops, let's see if this can hold, because it's so important. 200-period exponential moving average, this orange line right here. Can you see it? Yep, you can see it very nicely. And then look what happens. It takes off and it goes to peak A, peak B, peak C, and then pop to a peak D, and now it's pulling back again. MACD turned down, stochastics very low, it went down to 19%, and that's just saying it's having real trouble. And that's another reason why I think that we could be looking at this as saying choppy action. And the choppy action is going to be reflected by how we rotate through the different sectors. Look, the XLP, which is the S&P Select Consumer Staples Spider Fund, holding the all-time highs in the 59.42 area. This is really good action. Now, when I look at this, I can't believe, am I calling this really a leg A? Let me just open this up so that I can see where the initial, yeah. Okay, this is an F/A. Why is it an F/A? I'll do a little Chapman wave analysis right here. The low bar that started the whole move started back in July or August. It was August of 2015 at 43.72. It went to peak A, peak B, peak C, peak D, peak E. That was that top that was January, I believe. Yep, January of 2018 at 58.95. Plummets down to the 48.33 area, holds this trend line support, big expanding wedge formation, and then runs up to a new all-time high. But because it didn't take out that starting point, that means I can give it an alternate count of F/A. So within that context, what I am looking at here is, I've got a bunch of questions coming in. Yep, I'll get to the questions. Is that this could be like a big cup formation, and there could be a pullback. I'm inclined to think consumer staples, Procter & Gamble, Coca-Cola, PepsiCo, Walmart, Philip Morris. I mean, this is just the whole slew. Costco, Mondelez, WBA, that's Walgreens. This says to me that we've got to be a little bit careful that that if it is an F, there could be a pullback, maybe to the 50, between 56 and 54, and that's going to be the test. Everything about this technically says this could be a leg A, and that means for the rest of 2000, and this is a monthly chart, the monthly chart of 2019, this could be really good since you'd anticipated a leg B, and then a leg C, and then a leg D. Wow. So that's what I'm looking at here. And one other thing I'll do just before we go to our break is that I want you to look at, I said crude oil. Crude oil is acting quite nicely here. I'm anticipating there might be, it's in the rectangle formation, 60.28 in the continuous contract was the high. Back on the 1st of July, it pulled back to the 56s. You know, this is a very good move. It's within a range, a rectangle formation. It's just holding very nicely, and I like that. But I am disappointed that the IYT, the Transportation Index, is doing very poorly. It's in a sell signal. Actually, it's a sell mode today in the daily. Weekly is still holding quite okay. I want to see the transports moving up with the technicals, as well as moving up with the Dow transport, with the Dow Industrials. It's not doing that. Industrials all-time high, transports not even halfway into their consolidation price-wise. I don't know. Now the Dow's only up 46. S&P's up 10. I'll be right back. Theme music rolling. I'll be right back. Basil Chapman, Tiger Conditions Hour. Dow's at 47. I'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We were looking at the ITY, but actually what I also had questions about was the IYR, which is the, here we go. This is the IYR is that at a new all-time high? This is the REITs, the U.S. REITs. Here we go. Yeah, iShares US REITs trading at 91.03 was the high. It's trading at 90.90. So it's missed by 12 ticks, going to a new all-time high. If it does that, that's going to be really positive. It'll start leg D, and then you can see the Chapman Wave inside track repellent zone could take you all the way to 91.88. So we are really close to some kind of resistance here. That would make a new leg F/B in the daily chart. And it will make a new leg D in the weekly. And now that means you'd be ready for some kind of a breather. And at the same time, we've got a leg B in the monthly. I was asked if I could about a PLD, which is Prologis, which is something we've had for subscribers since 75, and now it's trading at 82.97. We've taken a little bit off. This is now getting into an area, and this is the reason why I'm saying that in terms of the rates, we want to do a little study right now, and I'll show you something that I think is going to be very interesting. Fed could say one thing, but we might just see counter trend, something else. Leg D in the monthly of Prologis, PLD trading at 82.96, up 34 cents. Monthly chart, very strong technicals. MACD is good, stochastics 89%. Weekly, 87%. Stochastic, MACD is good. It's in leg E. Very quick, D to an E. Always says, just be a little careful. Same thing in the daily, D to an E. And it's at, the MACD is not anywhere as close to as good as it was when it made that high of 82.82 back on the 20th. Yeah, 20th of June. And the stochastic is at 89%, very good, but less than it was back then. So there's a slight divergence. And I'm just saying, this is giving me a clue to say between the IYR, the PLD, and the TBT. TBT is the inversion of the TLT, which is the Lehman 20-year Treasury Bond Fund. Yes, did this or didn't it? See, so the high here was 29.32. Let me type that in. 29.32, once, twice, we've got it. And today's high was 29.33. We've just started a leg B in the TBT, which means the TLT is pulling back some, and that's what I showed you when I went to the bonds. Look, here it is. We're always looking for Ds, and there's your D. It's your second D in about a month, and we're pulling back a little bit. Not big deal, but the technicals are failing, and the price has now joined the technical, so I can put a down arrow at a peak D. It says sell signal, probably a sell mode within another day or two. And this is what I'm looking at in the month, in the weekly chart. You've got a doji leg, candle leg F last week, and now you've got a lower low, although the price right now is higher than the low of last week. But this is something to monitor, because this is what I'm saying, that we could get some kind of a counter trend rally in the yields. That means the TLT, let me just put the TLT up here, starts to pull back and at an alternate count G/C. Everything about it points to probably a G right now. If it goes under 131 at any point, it's at 132.09. I'm saying 131.40. Closes under that. That suggests absolutely that is a G. Get back into the rectangle formation. Had a question about GBTC, talking about a G/C. The GBTC is the Bitcoin fund. Let's see, what's the question? S&P says, Basil, I sold my GBTC this morning. Where is a good buy point to re-enter? So we've got the rectangle formation. It failed to break to a new high, peak D, 17.40 just about 2 weeks ago. On the 26th of June, it goes to 17.40, drops sharply down to $12. Was that just under? Or, yeah, 11.99. Rallies back today all the way to the 17.17. So S&P, congratulations. I think you did a brilliant move there. You played it just perfectly. Yes, it could have another little test of the 17s, but my thinking here is that it's probably going to test 14. But if you ask me again at 13.30. You just got out fabulously. Ask me at about 4 points of 13. So ask me. Yeah, I'd say that's the price that I'd like to look at, 1/3 lower than your exit point. Very good, congratulations. If it does go higher, it still says that this whole area between 15 and 14 is probably an area that has to come back to retest as a base of support. But I'm also going to say, you're the one that got in perfectly. I'm just the one that's kind of giving you some guideposts that I'm looking at. I'm going to refer to you. I think you're the one that really nailed it. So I'm going to say congratulations to you. Bravo. Great position play and a great way of trading to know what you wanted and to get out what you wanted, and then sit back and have patience to see if you can re-enter at a good point. So the buy point would be, as I say, somewhere right in the gap, right in the under 14. Oh, thanks to Larry for posting his Gartley. I'll close it. Oh, wow, what a team we've got here at TFNN. That's wonderful. Good. So, so Larry will be on, I believe, 3 to 4 this afternoon. And I will be on 4 o'clock to 5 o'clock this afternoon. I'll be doing the Tom O'Brien show. And I'll be doing the same thing tomorrow. So another 3-session day tomorrow. Tomorrow I got the 10 o'clock with Tommy O'Brien Jr. Great to be with him. He just really covers a lot of ground in a really nice kind of an open forum, in the sense that it just doesn't stick to the strictures of technical analysis. It talks fundamentals, it talks a lot of different things, really nice. And then I do my show, and then I'll do the Tom O'Brien show again at 4 to 5 tomorrow. So now let's do a couple of questions. XRT. Well, the XRT is really that to me is the more representative spider S&P retail, because it's stuck in a lower range. And we're looking at 52.96 back in August of 2018. And then it plops down to 38 in December, rallies up to 47, and now it's trading, it goes back to 39, and now it's just wiggling along. There's the H, lowercase h pattern, is at 42.53. That's way better to tell me that retail is not doing so great, because if you look at the RTH, which is the Van Eck Vectors Retail ETF, it's at almost at an all-time high. Whoa. See, I forgot to type this in the other day, and I said I should, but I didn't. 110, 112.17, 112.23. So 112.23, all-time high, 112.23, and that was in, I believe it was August of last year, October of last year, with the Dow made its top. So let's put that in, 10.2018. And now 112.23. Today we went to 112.35. A new leg, A, B, F/B. Oh, there are so many overlapping waves here. This is getting the turbulence. Watch the water. Yeah, be careful there. So I can't remember now. Is that for me right now? Is that my latest thing for the break? Yes, there's a break coming up. I'll be right back. Dow is up 76. Basil Chapman, Tiger Technicians Hour. Music is rolling. I'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in a tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago, with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the Gold Report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your Gold Report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
This is Tiger Technicians Hour, and Dow's up 75, just kind of stuck in the range. Let's just have a look at the E-mini. Right now, the E-mini, yeah, it's made an arch formation, hasn't been able to break above even the high that was made just at 1208 of 2998.50. We're at 2996.50. Trying to work hard, but we'll see how this pans out. Most importantly, I looked at the GDX. GDX made a peak G/C in the Chapman Wave methodology back on the 25th of June at 26.25. Pulls back a little bit. It falls, just doesn't. Yeah, it just starts to fill the gap. Goes to 24.53. Now it's trading at 26.03. And now, what's really important about this is that the weekly chart of the GDX, Market Vectors Gold Miners ETF, has expanded. The MACD has expanded. Look at the stochastic at 91. Still very strong. Look at the 1, 2, 3, 4, 5, 6, 7 over the last 7 weeks. Big green candles. Even when it was down last week, made a lower high, it had a big green candle. So I'm not dismissing for 1 second the fact that dollar can have a little bit more of a time-wise of some kind of a consolidation, and that the Fed talking lower rates is really helping gold. And if you're looking at the monthly chart, this is July. June had a high of, what did I say it was, 26.30? 26.25. Let me just type that in over here so that I got it. 26.25. Well, look at this. If you're looking at the monthly chart, if it goes to 26.26, anytime this week, anytime in July, it's extended leg C. And that's a big positive. So I'm not just missing for 1 second that gold has become a very important instrument in this whole panoply of what we're looking at in sectors, in the different mediums that we look at, whether it is a metals area, whether it is a yield area, whether it is semiconductors. Look at the semiconductors, SMHs. We had a call yesterday. Paul wanted to know about his 3 times long position. I said, yep, it looks good, but try to have a raised stop and don't try, if you're not stopped out, just keep it. And, well, he's in a huge position now because up 1.59, the SOXL, which is the 3 times long direction daily semiconductor bull ETF, is up 5.29, up 3.56% just today alone. So he's done very nicely. Congratulations, Paul. Now, I'm going to say to you, keep that position. And remember what we spoke about? Have a trading stop. even here, I'd have that trading stop. So you should have taken a little bit off when it gapped up today at opens at 153 round number. Oh, those round numbers. Watch out. If it closes below 153 at any point, it means it could be testing the low of the day. So in the meantime, the low is 150.89. And I would have said to you, keep a trading stop, and some part of it should have been off because this is like a bonus. You didn't expect in one day to have a 3% move like this, and especially since yesterday is over 4%. So yeah, take it a little bit off, and here's the reason why. See the MACD is making this M-shaped pattern. See the stochastics very weak at 52%. See on-balance volumes running, but it's not as high as it was when it made the high of 170 on the SOXL at 171.60 just on the first. So this says to me there could be a failure pattern in the SMHs. Just be careful, and therefore you need some. I would do it in thirds, and 1/3 I would have 1/3 off, and the other third would have some kind of a stop, probably under today's low, or maybe make it into the gap, give it a little bit of room. Say at 150.20, you've got yourself huge bonus in. You were in yesterday, I think it was. Can I even find it here? Yeah, and subscribers, I got all those messages when I got back. I finished early. I did everything at 8 o'clock, and I sent everything off, and I thought, wow, that's great, nice, good timing. And then I get back here, and I'm kind of just starting to listen to Larry, and I look around. I've got all these messages. Where's the opening call? What's going on? No Traders Corner and then I guess the email. So I quickly sent it out. I thought it was out already. There weren't any changes because, as you know, we were expecting the chance of a new leg close to a leg D today or yesterday. Well, we got leg D in the Dow. So everything we wanted has been accomplished. Now I think we need to handle our trades, our positions, and we need to be able to look at what funny enough, I was going to go long the semiconductors, but not once there was a gap. When I sent out my newsletter at 8 o'clock, it might have been time to buy, say, the SMHs. I don't think you could have bought SOXL before the bell. But if it had popped up, I would have had to say immediately, take something off if you get any bonus and keep half the position and raise the stop. And that's kind of what I'm looking at right now. Why? Because if you look at Applied Materials, AMAT, oops, I got to keep looking at my clock here, AMAT, then what we're looking at is it went to a peak C. It hasn't gone to a D, but that is an E in the weekly chart. And the monthly leg B, it says, yeah, good action, up $1.27 today. But you would expect that the pullback that we just had from the high 47s down to the high 42s, that was too deep. Something was not right with that. So I'm just saying, if you are long, and Paul, you're long the SOXL, keep your long position. But I think now you've got to start managing the trade a little bit better. It would be great if it just keeps going. If the SMHs trading at 112.35 takes out the high of today of 113.37 in the next 2 days by Friday, if it's taking it out, that says, you know what, really good chance of trying to go back to the high of the first of July, and that's at 115.96. So that looked that good. And yesterday, I must say, I love the candle. As I was talking to Paul, I liked what was going on. I loved it overnight. I loved it this morning. And then I thought, I don't know. I just need another day. And then, of course, boom, while I'm at the health center, I see the ticker and it says, boom. Spiral to the upside, but I'm cautious here. I'm just watching this closely. So that's that. Now there are a couple of things that I was asked about. I did the question there. That was a question I was asked yesterday, and I don't think I got to it. Yeah, I got this yesterday, and it says MACD buy signal in effect according to Abigail Doolittle on Bloomberg charts. Now, I don't know what it applies to, but all I can say is that if it applies to me, we're already there. And the MACD, look, if you're looking at the Dow, The MACD is already starting to pull back. In fact, it's very close to turning negative. I don't have any other indicators to say that it's negative other than it's in leg D. The MACD is still good. It's still positive, and the stochastic is still at 83%. I don't have a signal yet. I might anticipate a signal, but that's different to getting one. I don't get that yet. And if you're looking at the 120-minute chart, let me just show you something just as we're about to go to the break. Look, there's your leg D in the daily, and here's your leg E/A in the 120-minute chart. And if I can get there just before the break, yeah, this big spiral up, it went. This is an E/A. My thinking here is an E more than an A. I think the Fed's got a lot of work to do and explain.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So, folks, we're back, and this is the final segment. So I'll be back for the Tom O'Brien Show at 4 o'clock. Let me just say I got an email from Hector saying, "Hi, Basil, HMY, is it a rogue wave going up? I want to pull my whole position off the board. What's your thoughts?" No. HMY is $2.44. This is Harmony Mining, gold mining. I think I lived near Harmony Mines back in South Africa when I lived near Johannesburg, just off the reef, Vaal Reef, as a teenager. And no, it's looking great. I'm calling this a leg C. I could call it a leg F. I think it's got more to go. It looks great. It's above the 9-period moving average, but at some point very soon, expect it to chop around around between the 250s, 260 maybe even, and then test $2.30 to $2.20 support. It'll start chopping around. Very good action. Weekly is looking good. Monthly is looking good. Keep your position. Raise your stop. If you are nervous, raise your stop on a little bit, or even now you could take a little bit off to feel comfortable at 244. I like it. I think it's going to go a little higher, and it's raising the base of support to the whole 220, 210 area, so keep it. So we're just about to wrap up, and I've got a few moments left. So let me just say my service is the opening call, my daily newsletter. It's a 30-day guarantee, and we've had some really good positions. We're up about, I think, 18% or something on just the Dow position that we got June the 3rd. So we have had some very nice, had some mistakes as well, 1 or 2% losses, but it's the big ones that have been counting. And that PLD we've still got all the way from 75 and hit 82s today. So thank you for being here. Have a great day. Stay tuned for Steve, Dave, and then Larry Pesavento, I believe, and I will be back at 4 o'clock. I think I'm about to wrap up. Is the music going on? I don't know. Running blind here, at least orally blind. I can see what's going on, but I haven't got the music itself. But thank you for being here. I do appreciate it. And the Dow's up 82, pulling back from the major high of the day, all-time high. All right, wrapping up. Thank you very much for being here.